Hello friends, in the series on the income tax cases, today we will discuss a very important case which is based on the additions of penny stocks. Whenever the assessing officer do have any investigation report that the assessee has dealt in some penny stock transactions or bogus long-term capital gain or bogus short-term capital loss, then it has become a practice on the part of the revenue that if the assessee submits all the evidences which were possible to bring before the assessing officer, then even without being commenting on the quality of those evidences and even without verifying those documents or doing any verification from any person, the assessing officer just makes the addition by simple writing a line in the assessment order that the evidences submitted by the assessee are not tenable. So what is the fate of these type of assessments and at what level the assessee can expect some relief from the appellate authorities? This issue has been very well taken up by the Kolkata I.T.A B bench in the case of Nalanda Builders Private Limited versus Deputy Commissioner of Income Tax, and this case is reported in 122 I.T.A Tribunal at page number 346 and the date of the judgment is 11th January 2024. The present case relates to the assessment year 13-14. In the present case, first of all, the assessing officer made some addition on the basis of the sale consideration of 2 flats which have been sold by the assessee. The assessing officer alleged that there is some difference between the sale consideration and the fair market value of the flats, and the assessing officer made the addition accordingly. At the same time, the assessing officer alleged that the assessee has taken accommodation short-term capital loss to set off from the long-term capital gain of these flats. It was the allegation of the learned assessing officer that the scripts in which the assessee has dealt were in the list of 84 scripts which have been marked as tainted by the SEBI in his report, and it was the further allegation of the assessing officer that the brokers have mentioned in their statements that they have manipulated the share prices. It was the allegation of the assessing officer that the assessee was involved in price rigging, and the assessing officer, without giving any comment on the various evidences submitted by the assessee like contract notes, demat account, bank statements, and without making any inquiry under section 133 subsection 6 with the buyer of the shares, with the seller of the shares, and even with the stock exchange, made the addition, that is disallowed the short-term capital loss of the assessee. When this matter came to the CIT appeal also upheld the order of the assessing officer. So the matter came before the tribunal. When the tribunal heard the matter, the tribunal said that in the present case there is no doubt that the scripts in which the assessee has dealt comes into the list of 84 scripts which has been marked as tainted by the SEBI in his report, and there is also no doubt that the investigation wing of the income tax department has unearthed a huge manipulation in taking the bogus long-term capital gain or short-term capital loss in their searches. But in the present case, it is also a fact that the various voluminous evidences have been submitted by the assessee in the form of contract notes, demat statement, bank statements, and other documents, and the assessing officer has grossly failed in doing any independent inquiry under section 133 subsection 6 by sending these notices to the purchaser, seller, and even the stock exchange. The tribunal said that in the present case, the assessing officer has merely relied on the reports of the investigation wing and SEBI, and in the present case, when the searches were made by the revenue on the various persons, the name of the assessee was not mentioned in those searches. There was no material relating to the assessee which was found in those searches, and moreover, in the present case, even there was no whisper by the assessing officer in the assessment order in disbelieving the assessee's evidence or rejecting it. The tribunal said that in the present case, the whole addition has been made on the basis of the presumption that the assessee has evaded tax, and the whole addition is being made on the basis of the statement of some unrelated persons. So friends, from this case, when the tribunal has deleted the additions made by the assessing officer, which were confirmed by the CIT appeal, it is very clear and loud message that it is the prime duty of the assessee that the assessee should submit as many as evidences during the assessment proceedings, because then the ball comes into the field of the assessing officer to comment on them. Because if he fails in commenting on that or making further investigation, then the assessee may get his case from the tribunal. At the end of this video, once again I am repeating the name of the case. The name of the case is Nalanda Builders Private Limited versus Deputy Commissioner of Income Tax, and this case is reported in 122 I.T.A. Tribunal at page number 346, and the matter has been decided by Honorable I.T.A. Kolkata B bench on 11th January 2024. Thank you friends.